Hello and welcome back to another episode of the For the Property Investor podcast. And we're here with the weekly news segment. And of course, the only man that can be here with us to help present the news is the one and only Nick Bendel. Welcome, Nick.
Thank you for having me. Great to see you.
Yes. And for those only on the audio, thanks for listening as well. But you can watch us on YouTube, Spotify, and maybe any other platform as well that has the video availability, but as well as on all the audio. So I'll stop the plug now. But how's your week been, Nick?
Well, my week has been very productive. I don't say I'm busy anymore. I say I'm productive, and I had a very productive week.
Yeah.
For those who don't know, I own a copywriting agency called Hunter and Scribe. We write content for finance and property professionals. And over the past week, we signed 2 new clients, a buyer's agent who wants help with fortnightly blog content, and an accountant who wants a monthly newsletter.
Very good. Very good. We've had a very productive week as well in the last week. Actually, today we're changing over some software, so we had to go through some training. But we've also had a new referral partner come on with us, a buyer's agent who's actually working in the commercial space as well, but started off with residential, and they're buying all over the country. And one of their favourite spots is Melbourne, as we've talked about before. It's I think it's going to be Melbourne's year this year. So that's been my week this past week. Will we get into the news, Nick? What's happening?
Yeah. Well, we have 3 very interesting stories. The first one, headline inflation holds steady, core inflation rises. The annual inflation rate in January has come in at 2.5%, the same as December, according to monthly inflation data from the Australian Bureau of Statistics. That is the 6th consecutive month that inflation has been within the Reserve Bank's target range of 2 to 3%. However, core inflation, which strips out volatile price changes and is therefore the Reserve Bank's preferred measure, rose from 2.7% in December to 2.8% in January. That said, core inflation has now stayed within the Reserve Bank's target range for 2 consecutive months. The day after the inflation data was released, the market expectation of a rate cut at the next Reserve Bank board meeting fell from 17% to 14%. Now, Owen, given that we've now had another month of both headline and core inflation staying within the Reserve Bank's target range, can we finally say that inflation has been defeated?
I think it's definitely stabilized. To see the under the inflation figure that the Reserve Bank prefers to look at in terms of the core inflation figure rise a little bit. There'd be a little bit of concern there, and especially with the inflation figures overseas, particularly in the US, seeming to be bouncing up again. There would be some concern there. So yes, in terms of the rate cut expectations, I think that's killed anything for the next round.
Well, if Trump does start a trade war with tariffs going up all over the place, I guess other countries would retaliate with their own tariffs. Everything would then get more expensive, which by definition is inflationary.
Yes, I guess it would be. And even though, and to the layperson who's, mum and dad working a job, they're just trying to put food on the table and pay the mortgage, pay the rent. It doesn't really make any sense why that would end up pushing interest rates up for them when it's really a false economy of raising taxes against each other. People would say, doesn't that just equal itself out? So why do we need to raise interest rates as a result? But yes, it's going to be an interesting year.
Now, speaking of interest rates, I mentioned the day after the inflation data was released, the market expectation of a rate cut at the next RBA board meeting on April the 1st fell from 17% to 14%. So I would like you to make the case both for and against a rate cut. To begin with, why should the Reserve Bank reduce the cash rate on April 1?
All right, start with the difficult answer first. It's why should they? Well, it's households have been hurting for a long time. One rate cut standalone doesn't really make a huge difference. And to really provide relief to cost of living for mortgage holders, you really need to see 2 or 3 rate cuts to make it worthwhile.
You said that with such conviction. And what about the opposite argument? Why should rates stay on hold on April 1?
Well, to stay on hold, it's I mean, the case for that is really the obvious one, where we're not seeing inflation dropping dramatically, where we need to stimulate the economy to be able to keep it growing. We're still seeing healthy growth rates. Um, we're not seeing people being laid off their jobs in any great amounts where it's likely to affect the economic growth of the country and the economy. So again, we don't need to cut rates to stimulate the economy and stimulate growth. So yeah, there's no real sort of concern as to why we should cut rates. Sorry.
Well, the next board meeting, as we said, it's in about 4 weeks' time. It's going to be really, really interesting to see what happens.
Yes. As per the market sentiment of a very low chance of cutting rates, yes, I tend to agree.
Our second story today, productivity challenges limiting housing supply. A new report from the Productivity Commission has found one reason why Australia is struggling to build enough homes. Builders have become less productive. The report found that home building productivity has fallen by 12% in 30 years, despite the broader economy seeing a 49% productivity boost over the same period. As a result, the number of homes completed per hour worked has dropped by 50% over those 3 decades. The Productivity Commission highlighted 2 key issues driving the decline. First, a slow, complex approvals process, and second, severe labour shortages. The average residential building firm employs fewer than 2 people, making it harder to scale operations. A lack of innovation in construction methods has also slowed progress. Owen, are you surprised to hear that builders have become 12% less productive over the past 30 years?
No, not really surprised. It's because the process of building a home hasn't really changed that much.
Hmm.
Any productivities in prefabrication of trusses and frames were all done prior to that. And I almost became a builder myself in my young years, so I saw some of that. That was that had happened, previous to that time, about 30, 40 years ago. So it's to expect any further without completely changing our methods of building and materials of building. Yes, wouldn't have expected any real productivity. And since then, the red tape um, and the paperwork and regulations that builders have to go through to be able to just get out of the ground
Hmm.
and start building has increased so much that it is stopping them from even starting building. And yes, and then you add the labor shortages, especially a lack of young apprentices coming into the industry. it's just made it a bad problem worse.
Well, the Productivity Commission recommended the establishment of coordination bodies to address delays and speed up construction processes. What do you think of that idea?
Um, I would have thought that we already have enough of these bodies to be able to fix the problem. So, is it just lip service to say that we're doing something by creating another committee to look at the problem? The fact is, the government just needs to help to cut all the red tape um, so that builders can start building, which is what they're meant to be doing, instead of dealing with regulation after regulation after regulation. Let's make the process a lot easier and smoother, and deal with the regulation as already inbuilt into the process.
You make an interesting point. Often when there's a problem we're trying to fix and it's been around for years and it's causing us concern, the instinctive reaction is, let's hold an inquiry, let's write a report. But if the problem's been around for years, there've already been a dozen inquiries and a dozen reports, and we already know what to do. So I think rather than holding another inquiry, maybe we should just do it.
Yeah, exactly. Let's stop kicking the can down the road, and so that someone else has to deal with it, and just get it done. I mean, when we've got 1 in 6 Australian workers working in government at in all levels, it's surely we've got enough people that can fix this problem.
Mm. Okay, well, I'm not going to hold my breath on the problem being fixed, but let's hope our builders are able to become more productive in the years ahead. Now, our final story, Owen, I reckon you're going to have some thoughts about this one. Should brokers be subject to clawback? The FBAA Mortgage Broking Association has highlighted how damaging clawbacks are to mortgage brokers. For those who don't know, a clawback is when a broker has to refund some or all of their commission if the borrower pays off their loan quickly, usually within the first 2 years, depending on the lender. MPA magazine, quoting data compiled by the FBAA and Core Data, reported that 80% of brokers were affected by clawbacks in 2024, with almost half of brokers losing over $10,000 each due to lenders' clawback policies. The FBAA report also included testimonials from brokers about how clawbacks had affected their mental health. Now, Owen, before opening your property management business, Leafield, you were a mortgage broker, so you understand the issue intimately.
Yes.
Should clawback be retained or removed?
Oh, it's ridiculous. I mean, a broker writes a loan today. They do all of that work up front, and they don't get paid anything by the borrower usually. And and then they have to wait until after the settlement of the loan, which can sometimes take months and months, even 6 months even. And and then it might take them a month or two to actually get paid through their aggregator. And then they have to wait up to 2 years before they're out of this clawback period. And it's where they can have 100% of the income that they earned clawed back because the borrower decides to sell the property, or they refinanced through a different lender for some reason without going back to their broker. But it could be for no reason other than they've just made a decision that they need to sell their property. Now, if that borrower had gone directly through a bank, does the employee get clawed back?
Hmm.
You know, part of their salary because this person didn't keep their loan, and on top of that, it's a broker has a best interest duty by law to do what's best in the interest of the borrower. So they're not allowed to refinance someone out of a loan to another product just so that they can make more money. So it's got nothing to do with stopping what they call churn. So a broker just churning loans every 6 months just so that they can make more money out of it. And it's because they're legally liable to make sure that the borrower has the best loan, and they have the borrower's interests as their first interest. So if a banker employee, though, goes around and starts refinancing customers to another product, they don't have the same legal entitlement to have the borrower's best interest at heart. So it's just the banks trying to put all of the onus back onto brokers who are the ones that have saved the borrower, who have saved the population really of this country from being pillaged by the banks over the last number of decades, which is why year after year after year, the market share of brokers have just continued to increase year after year.
Well, I said you were going to have some thoughts, and you certainly did. You made a really interesting point about churn, because the argument that banks have been using for years is we need to have clawback, because before we had a clawback, brokers were churning loans. And so we need clawback to stop the churn. But as you pointed out, best interest duty, which I think was introduced 3 years ago or so, that now means that brokers legally aren't allowed to churn, because that would not be in their customers' best interest. So there is now something legally to address the issue of churn, which suggests that now banks don't have a leg to stand on. There is now nothing to justify clawback.
Well, before best interest duty, there was a duty from brokers to recommend they had a particular term for it, and this is while I was still mortgage broking myself, and so they've always had a duty to the client to do what's best for the client under legislation. Now it's very explicit that it must be in the best interest of the client. And it came through out of the Royal Commission. So yeah, it was over 5 years ago now. It's something that's very important. I just wish they had extended this to the banks themselves, and to, more importantly, the employees of the banks. Make the employees of banks legally responsible for the advice and their actions when lending money to individuals.
What do you think of the evidence suggesting that clawbacks are affecting brokers' mental health?
Of course it would be. It's brokers are trying to run a business, employ staff and so on, and then they have issues that are risking their cash flow when it's of no consequence. Yeah, when there has been nothing that is within their control to be able to solve the issue.
Yeah, it's got to be maddening. You're trying to run a business. Business is always tough. It's always competitive. We both run businesses. We know that intimately. And then a year after a loan has settled, the client decides to move home, they sell, the loan gets paid off, the broker gets clawed back, and you can't budget for that. They don't know that that clawback's coming. And of course, that's going to have an impact on their mental health.
Yes, and you can't expect clients, the borrower, to be factoring in whether the broker is going to be affected by this. So it's the alternative is, and of course this is the motivation of the banks, is to make it is for brokers to not be in business. And this would just play into the hands of the big banks so that they could get more market share, so that you haven't got brokers keeping them honest.
There's one final thing I want to raise with you. I can remember this would have been 2023 National Finance Brokers Day. Sam White from Loan Market gave a speech, and during the speech he addressed the issue of clawbacks, and he said that if the industry does succeed in removing clawback, it's not the case that brokers would be able to pocket this win. Lenders would then compensate by reducing the commission they paid. So he said, if and when it happens, there won't be any free lunch. If clawback was removed, do you think it would be fair for lenders to reduce commission rates in tandem with that?
I think that would be a reasonably expected to be part of the compromise, and where there would be maybe more onus on the trailing commission rather than the upfront commission, and it's so that there's more onus on the broker to have that trailing commission to be there for the longer term. So there's not as much incentive from the bank's point of view for a broker to churn a loan necessarily. So it's interesting topic, and it's something that yes, because of the nature of the way that the banks do pay brokers, they were really part of the problems to start with. So yes, more onus on the long term, and maybe less on the short term. That might solve the problem.
Well, we can't say you don't give the listeners value for money, Owen. You've told the banks what they should do with clawback. You've told bureaucrats what they should do with housing approvals and planning. You've told the Reserve Bank what they should do with interest rates. I think our listeners have been getting real value for money.
Thanks, Nick. I can only try.
And you're not going to claw back any of that value. They get to keep it.
That's true. I've given it no takesies backsies.
Well, thank you for the chat. I will see you next week, and it's possible that when we chat next week, I will be in a different location.
Oh, that'll be interesting. It's maybe you can show us around.
Quite possibly. We'll have to stay tuned for that one. Thanks again, Owen. Nice to chat.
Thanks, Nick. See you next week.